And we're back with more. Our final segment of this May 19th. Our good friend Jonathan Wellum, CEO and president of Rocklinc Investment Partners, joins us today, as he does at the start of most week, this of course being Tuesday. Did you have a great weekend, Jonathan?
Yes, I did. Yeah, lovely weekend. Was able to get up into sort of northern Ontario, Parry Sound area, and spend a couple of days up there. It's still a little cool, but the water is very cold, but it was going in the right direction and just good to get away from the city.
Yeah, I hear you say that. I love Parry Sound. I love northern Ontario. And yet being here in Florida and dipping your toe in the Gulf of America, it's a very different world. It's like...
The water was actually 43.9 degrees Fahrenheit up in Georgian Bay this weekend. So that's cool. It's been a cool...
Oh, yeah.
We do need a lot more warmer days so that we can feel like Florida.
Yeah, frankly, it'll never feel like Florida. But I've gone swimming in Georgian Bay many times, and the beaches out there are very nicely. Wasaga obviously is just Wasaga, very commercialized and stuff. But you go right up the line, and some of the beaches there are beautiful. It's a great part of the country, and I'm glad you managed to get up there. I miss it. It's like a second home for me. I always feel really good when I'm in Northern Ontario. That part of people say, that's not really Northern Ontario. You're not in James Bay or something like that. But it's nice. All right, let's talk about real estate for a minute, because I just got my property tax bill. They sent it down to me. This is Queens County in Nova Scotia. And I got a piece of it's just a piece of land, really. It's a little less than 3 acres. It's on a very nice lake out there called Maliga Lake. And I'm thinking to myself, I don't think the value of this land is growing to the point where it's offsetting the taxes that I have to pay on this thing. It just doesn't make sense. I always thought real estate, you couldn't go wrong. You could never go wrong with real estate. But now, of course, we've got home values falling like 25%. I've heard 30%. Obviously, it depends on which market you're in. Others are predicting that it'll continue to fall. Some people think, no, it's eventually going to turn around and sellers are going to have their way. But it's still very much a buyer's market. But in terms of from an investor's vantage point, how do you see getting into the market now?
A couple of things. And let me just follow up on that tax situation. I think people are finding out that municipalities, and I'm generalizing, Mark, there are some well-run municipalities, but many of them are run by very left-wing socialist individuals. They tend to get in at the municipal level. We don't pay attention as well as we should. And what you're finding is an abusive amount of spending and lack of financial discipline. And so when property prices are going up and the values are going up, the assessed values, yeah, they say, okay, we're going to charge more. We're based on assessed value, et cetera, et cetera. But now that we're seeing prices come down, property taxes are going up. The spending it's out of control on many municipalities. And when you get into our big cities, my goodness, it's wreckage. You can look at Toronto and Mississauga and others now, the way they're run, and incredibly poorly run. So that's really frustrating for people when they're not getting value for their dollar. And it's just a continual trough that they have to come back to the politicians. In terms of real estate as an investment, right now it is certainly much more of a buyer's market, and I think it could become even more of a buyer's market, and that's because we're having very little economic growth in Canada, virtually none, I would argue, probably none. The numbers say maybe 1%, 1.5%. We've got inflation running closer to 3%. So that's eating away at people's disposable income. Incomes are not rising very quickly. Unemployment is sneaking up in Canada, especially in Ontario. We're running 8% plus. The city's even worse. And so you're not getting a lot of wealth created. And then what we're seeing happen right now in the last month is we're getting interest rates moving up quite substantially, so that in the United States, you've got the 30-year bond trading right now at 5.17%. That's the highest in 20 years. You've got the 10-year bond in the United States over at 4.66. In Canada, we're also getting our interest rates moving back up, even though the Bank of Canada wants to hold them down. And that's because there's just so much debt being turned over in the marketplace. People are demanding a higher cost to money. And so interest rates are going up. So go back to your question about the housing market. when people are so levered and so much leverage and their mortgages are really consuming a lot of their income, along with inflation, food costs going up, insurance costs, municipal taxes, all these things you're talking about, I think it's putting a lot of pressure on people with mortgages. And as those mortgages come due, there's going to be a lot of pain. And those mortgages are continuing to come due over the next 6 months, 12 months. We could see prices in many areas drop another 10, 15, and even 20%, certainly in some of the areas that were really escalated quickly. You can get areas like Brampton's weak. Some areas around outside of Vancouver are very vulnerable, et cetera, et cetera. So yeah, people need to be very careful. If you're a buyer, be patient. If you're a seller, you better price your home efficiently and not be greedy so you can get the turnover on that property if you need to sell.
I keep hearing about corporate buyers of homes and that they can buy them cheaply because of the numbers of you get more if you buy huge numbers. So it's not if you or I buy a house, you're going to pay the going rate. You can pay the market rate. You can try to haggle, but at the end of the day, the market is the market. But that there are corporate buyers of these homes that can snap up thousands of these properties, single family homes, and make it part of their portfolio. Is that one of the things that is maybe keeping prices even like higher than what they would otherwise be? Do you think?
Yeah, a couple of things. That's been quite large in the United States, smaller in Canada. And the reason why that works, that arbitrage, if you will, is that if you're a company and you buy a home, then you can expense all the utilities, the property taxes, so that the income you might charge, the rental income, all of the expenses you can expense and write off. And so if you think about that, you can't do that as an individual. All those are all after tax costs when you're paying your electricity bill, your gas bill, and so forth. And so in a business structure, there are tax advantages that an individual will not have. And that means that those tax advantages mean that the corporate purchaser can actually pay a little bit higher and still do well on the property. So they can basically outbid a retail investor who doesn't have all those tax incentives. So there's been some legislation in the United States to make that tougher and more difficult in the market. And I think rightly, I'm not a big one for regulations, but corporations should not have a tax advantage over retail individuals when it comes to single homes and townhomes and so forth, because otherwise they will buy them up and then we end up being a renter nation. It's very important that people have the opportunity to own private property, to feel the benefit of the private property, to have ownership, be able to borrow against it. A lot of times when you're starting a business, you use your home as collateral. These are really important things in a capitalist system so that people can get ahead.
Yeah, and it really seems like private property is under attack in Canada. South of the border, you've got Trump, I believe, introducing, I don't know if it was an executive order or whatever, saying, no, if you're a corporation, you cannot buy 10,000 homes in this community or that community. I believe that he moved in that direction. I'm going to have to double check. I don't want to be wrong. But my understanding is that he's pushed back against these massive buyers of single family homes in order to keep them in the market for people who need them, rather than, as you said, move everybody into these rental stables. Although interestingly enough, I've even heard there are billionaires who say, you know what, homeownership, not such a great investment. People like Charlie Munger, whose philosophies I believe you are a big supporter of and adherent of, along with his partner who is still alive, Warren Buffett.
Yep.
They would say, you can own your own home or whatever, but at the end of the day, as an investment goes, it makes more sense being in the stock market. Is that true in your experience?
Yes, if you're a good stock picker and you can buy good stocks, you can compound much faster than typical home ownership. Now, again, in the real estate market, if you can buy an undeveloped property and then you can add a lot of value by developing it, of course, may do very well if you're strategic, you buy it smartly and you build smartly. But Hancock Park, I think that's where Charlie Munger had his home. He had that home there for 50 plus years, 60 years. It was a very nice home, beautiful home in a nice LA suburb. But certainly when you consider his wealth, it was a pittance. He was just living very carefully. And Warren Buffett bought a home in the 1950s and he's still living in that home. they don't really care. They just don't care. Their idea is they want to compound. They love the game of wealth creation. And their view is, why waste money on something that's not going to maximize my wealth? So yeah, they're a whole different attitude towards home ownership when it comes to Munger and Buffett. I think in terms of the average person, they should realize that it is a discipline to put your money aside. It's wonderful to own your own place, but make sure you don't go overboard. Make sure it doesn't become too much of your net worth, if possible. And make sure you're diversifying and getting exposure to business ownership, which can also ultimately grow much quicker. And as when you're owning a place, you got the property taxes, you got constant repairs, your roof, your furnace, your landscaping. It just goes on and on. And so keep that in balance. It's not necessarily the best investment, but it is one that can give you a lot of joy and happiness if you buy smartly and you don't overextend yourself so that the home owns you and you don't own the home.
Yeah, it is interesting because a guy like Buffett, I believe he's worth what, 80, 90 billion. I don't know where that number is. Munger, probably very much in the same vicinity. He passed away. But these people's views about things like homes, I could certainly see that with cars. And I suppose when you get to be that rich, you can literally drive anything on the planet. And so a guy like Buffett apparently still has his Lincoln or for something like that. I can't.
Yeah. Yeah. Up until recently, I think he might have a driver now. He'll be 96 in August. So he's really getting up there. He would drive around town and it made him maybe a 5, 6, 7, 8-year-old Cadillac or Lincoln. And he could care less. It just did not influence him in the least. He wasn't there to impress anybody. Even when he bought a jet, he called it the indefensible private jet. And then later on, he felt so badly about it, he bought the jet lending company, the company where you can go and you can buy portions of your time. And he thought that was a great idea. So he bought that company and then he would just rent out portions of his time. Net jets is what they called that. But he was always very defensive and apologetic if he felt that he was overspending and not being a good steward of his capital.
Compare that with Doug Ford's purchase of a jet and then selling it back at a $200,000 loss.
The thing that shocks you, even if there was an argument economically for a jet like that, it shows that you have no understanding of what people are going through and how that looks in terms of being a leader in Ontario. And it's just unbelievable how blind he was to that reality and then quickly had to back off. But that's the surprise, that he was just so out of touch with reality and the average Ontarian who was fighting to survive and to make a living. And he's out buying a private jet on our dime. Yeah, crazy.
Yeah, some people just don't get it. How do people find out more about the great services you provide at Rocklinc Investment Partners?
Yeah, the best is just to contact us through the website, which is rocklinc.com. That's link with a C at the end, so very simple. And then you can email us at info@link.com, and we'll respond right away. And love to hear from some of the listeners and see if we can help you protect and grow your capital.
Jonathan Wellum, thank you so much for coming on the show, and thank you for being a sponsor of the Marc Patrone Show. Appreciate it very much.
Great. Thank you very much, Mark. Keep up the good work.